Bitcoin needs to stop playing with my heart, man. We are still trying to break out of this range. Holy moly, it's taking some time. If we zoom in and go to the hourly, we can clearly see that we popped out of our range, finally, only to fall right back in. So when will we break out of this range? Because for us to see proper bullish momentum in the cryptoverse, we need to hold 70K as support. There was a lot of liquidity right over 69K. Bitcoin went up, grabbed that liquidity, and came right back down. There is some proper bullish news though. Let's dive right into it. So first things first, Metaplanet now holds over 1,000 Bitcoin. So if you didn't know, Metaplanet operates hotel business. The company, as of this year, also provides Bitcoin investment, investor relations consultation, Web3 consultation, and other services. It's a Japanese-based company, and they have been accumulating Bitcoin similar to how MicroStrategy has been accumulating Bitcoin. They are very aggressively buying Bitcoin, and they're continuing to do so. Do they know something that we don't? If I pull up the liquidation heat map, we can also see that all of the liquidity between 67 and 69,000 has been officially taken. So all those late shorts got wrecked. Now there is still some liquidity here, hundreds of millions in total, above the $69,000 mark. And if we take a longer time frame, once again, we can see that there is a lot of liquidity above the 70K mark, but a lot of liquidity around the 61K mark. It would not shock me if we grab this liquidity above here and we grab this liquidity below here before we went to all-time highs and stayed there sustainably. Another piece of positive news is that the Bitcoin ETFs have been absolutely soaring. We can see that on last Friday alone, there was over $400 million in Bitcoin ETF inflows. That is crazy. These inflows, along with the fact that it seems like we are consolidating right below the range high, could mean that we're about to see a massive breakout soon. So, the question is, do you go and bet the farm on this breakout? Well, there are some other conflicting factors that we do need to consider. Once again, I shared this with you in a previous video, but once the Bitcoin ETFs really start to pick up, it's usually an indication of a local top. Now, this doesn't necessarily mean that it's always going to be a local top, because eventually we will explode out of this range. And for all we know, it could be now. But this is just what history is telling us so far since the Bitcoin ETFs were launched. Check it out. Spike in volume, local top for Bitcoin. Another spike in volume, local top for Bitcoin. Another spike in volume, a local top for Bitcoin. And this has occurred over and over and over again. Now here, as you can tell, there has been a spike in volume, but we actually trended upwards. So could this be the shift in the market that we're all waiting for? A very bullish thing that we have going for us is the fact that Q4 is historically super bullish, guys. Take a look here. This is for October, November, December. These are the averages since Bitcoin's inception. Now check it out. October hasn't necessarily been the Uptober that we've all been waiting for, but we still have 2 more months to go. And these could very well be bullish months, especially after the election, assuming that Trump wins. And if we have a look at Polymarket, it seems very likely that Trump will win the election. Look at this, a 66% chance for Trump compared to Kamala's 34.2% chance. Come on, look at those odds. Trump is inherently bullish for crypto, and this could be lining up for an insane Q4. Now, I do have to take us back down to earth for just a little bit here. there are a couple of cautious signs in the market that I need to make you aware of. First of all, once again, as we're approaching the 69K level and the 70K level, perpetual volume and open interest is actually surging back to new highs, but the spot volume is once again hardly moving. You can see at the bottom of this graph here, this represents the spot volume. Now, why is this an issue? Well, we know that historically for a sustained Bitcoin rally, and when I say sustained, I mean one that will continue to go as we blast through all-time highs. For a sustained Bitcoin rally, you usually need spot buyers to be stepping in. And currently, the demand from a spot perspective just isn't there. We do not have that many spot buyers. Ideally, it's okay for the perpetual volume and the open interest to increase so long as the spot buying increases as well. And we just haven't seen that. The reason I'm pointing this out as well is because this has happened several times at this 69, 70K resistance, where we saw that the perpetual volume and the open interest were increasing, and then we saw a sharp correction afterwards. Now, I'm not saying that it'll be exactly the same, but usually you do want to see some spot volume. And lastly, this is just my hypothesis for how the market will proceed. We've been rejected at these range highs on 4 different occasions. Now, in my opinion, the upcoming labor market data in November will ultimately determine if we break out of this range finally, or if we do see an even sharper correction towards the bottom of the range. Why is that? If the unemployment rate increases, it would not surprise me if we see a sharp rejection again. But if the unemployment rate stays stable as it has been for the past few months, or we even see a slight decrease, it would be very likely that we finally break out of this range onto the most bullish part of the bull market. That covers today's update. Make sure to like, subscribe, and leave your comments down below. See you tomorrow.